Okay, guys, so the Chinese listed companies on the Hong Kong Stock Exchange have surged today on Tuesday. Does this mean we've hit the bottom of the market and have the Chinese stocks taking the maximum beating over their route the last month or so? So let's just take a look at what we've seen. So we've seen that JD.com surges 13%. We've seen Tencent rally 7%. We've seen Meituan, the food delivery company, rally around 12%. Alibaba up 7%. And we saw Cathie Wood buying another 164,000 of JD's ADRs, which are the American depository receipts. So do we think we've hit the bottom? I think that's the key thing here. We've seen Tencent, they recorded second quarter net profit beat. Baidu's revenue was up for the quarter. But where are we at in terms of sentiment? Because I know a lot of Western investors are slightly concerned around this regulatory topic. I made a video previously around the three key spokes which are important to the Chinese government and regulators. And where are we at in that process? So let's take a look. So you'll remember I spoke about three key areas which are of focus to the Chinese government. And we went through this in detail in the previous video. So do go check that out. Now, the first point was antitrust. Okay, so the Chinese government want to get on top of anti-competitive practices amongst their companies. Okay. Now, recently we've seen the draft rules come in to stop unfair competition. So this point has been covered off. We've seen what the impact of that is going to be, and that's what's listed here. So they want to carry out these few things. They want operators to not provide false data, such as the number of clicks on a piece of content. They say operators should not conceal negative reviews and only promote positive reviews. Internet platforms should not use data algorithms and other technical means to influence user choices, very important. And operators should not use data and algorithms to collect and analyze competitors' trading information. Nothing which we shouldn't expect there, nothing barbaric, nothing which we would not expect here in the States, and in fact, which we don't have already in the UK and the States around anti-competitive practices. So don't fall for all this FUD in the market around, this is what's going on. Go and read what what regulation is actually being put in place, and then you understand that there's nothing beyond the norm there. Okay? So that's the first one. So we can almost class this orange area for antitrust, as we know where they're heading with that. We know what they expect from their companies, and at least we've got a clear roadmap. Now, what about data security? Do we have any evidence around what they want with that? And the answer is yes, we know. They've introduced their personal information protection law. And again, this is no different to GDPR in the UK, HIPAA in the States. It's just data protection laws, which we would expect from any large economy, and we'd expect from ours. So it's no surprise to see this happening over in China. And in fact, it's welcomed. It will ensure the longevity of these companies and ensure that they're trading in a way which is comparable somewhat to the Western companies which we like to hold and trust. So again, we've got the roadmap there. We know what, the clarity for us as investors is we want to know what is the regulation. We don't just want the government to intervene and start fining companies left, right, for no reason. And we haven't seen that. Even though the media may want you to believe that is the case, we haven't. It's been any fines we've seen, like I've outlined in this video, come into one of these three categories which are being regulated. It's clear from the government and they're working for it. Okay, so that's the data security section. And the final bit is the disorderly expansion. So this was around ensuring companies don't grow at the expense of other socially acceptable practices in their economy. So, for example, making sure ByteDance doesn't grow at the expense of their youth being on their phones all day or causing any issues. Same for any of the gaming companies. They just want to make sure kids aren't gaming all day, every day, and that they play in a reasonable manner. And I think, again, that's acceptable. That's something we'd expect from companies in the Western world. And at least we know what is the framework and what are we heading towards. So the question is, given the good earnings we've seen, the 20% tanking and rout we've seen in these companies which are generating good PE ratios and they're generating good cash flows, is this something we should be sitting out on? Now, whilst I wouldn't suggest you have massive exposure in Chinese tech, I still think it's a sensible piece of exposure in your portfolio. The percent you should choose, but it should be something you're comfortable playing with, just to diversify away. Because I know a lot of investors will just have American stocks, just have Nasdaq tech stocks even, and it's a good opportunity for you at a 20% discount. Even with this 10% rally we're seeing today, we're still 18% off highs, right? So there's a lot of potential there. These companies have come in with good earnings. We can now see the regulatory roadmap, so it shouldn't be a surprise. And I think that will keep investors looking confident. We can see Cathie Wood has just bought back in. She feels confident now that things are looking for the up, and the regulation has pretty much hit max fear. So perhaps this is the turning point. So we'll keep an eye on it from here. That's my update on the landscape around Chinese stocks, and we'll see you in the next one.